Our lessons this week are found in chapters 5 and 6 of the testing book. Chapter 5 is quite short, while chapter 6 is the longest one so far at 45 pages. Whew, that's quite a bit, but we'll summarize it's not that much. Chapter 5 covers a single page and consists of substantive tests performed at interim. The interim is the period between finishing the audit report and the end of the fiscal year, typically December 31st for most firms. 4 items are presented here. Item A, procedures that may be performed at the interim. These include tests of controls and substantive tests. B, relationship interim substantive testing to audit risk. This testing potentially increases audit risk. C, considerations regarding substantive testing during the interim. This points out the difficulty of controlling incremental audit risk, the cost of duplicating tests at year-end, reliance on internal controls, and the predictability of the year-end balance. And finally, D, compare the balance at interim with the balance at year-end and investigate any unusual fluctuations as needed. The chapter concludes with a clear explanation of dual-purpose testing. Make sure you study this one carefully. Chapter 6 covers audit procedures for selected accounts. There are 10 accounts listed. They include cash, accounts receivable, inventory, investment, property, plant and equipment, including tangible assets, accounts payable, long-term debt, equity, income statement, and cash flow statement. We will examine the outline of procedures for each, together with appropriate comments on unique features of each. We will examine the outline of procedures. We did that. For cash, we use a lead schedule. A sample is included on page 35. This is a summary of all cash accounts that are transferred to the working trial balance. We begin by preparing the lead schedule and performing various tests of accuracy. Direct tests include cash inspection, bank statements, loans and deposits, and a test of the bank reconciliation. The audit does tests of transactions to expose kiting practices. Kiting means writing checks and counting on the time it takes for them to cash to write additional checks in order to form a temporary cash flow. This is becoming less and less common as speed of transactions is increasing to the point where it's almost not worth doing. But there was a time when checks were all paper that this was a much more common practice. The audit examines the other financial statements as well, including foreign currencies, rights and obligations, and presentations and disclosures. A list of questions follows. Be sure to look at them. For accounts receivable, we also prepare a lead schedule and perform analytic procedures. Various interim issues are discussed, and 3 pages of questions round out this topic. For inventory, we again prepare a lead schedule and perform analytical procedures. We also conduct test counts, measure values, observe inventories held by customers, and test transactions. 3 pages of questions conclude this section. For investments and derivatives, we again prepare a lead schedule and perform analytic procedures. In addition to the obvious tests, we also examine market values of securities. We also study the internal rate of return and CR of the derivatives. This is presented in 2 full pages of issues that are unique to these complex securities. A half page of questions follows these. Property, plant, and equipment also begins with the lead schedule and analysis, substantive testing, and tests of controls. A page and a half of questions rounds out this section. The same procedure is performed for accounts payable with special emphasis on completeness. A table of that compares procedures for accounts receivable versus accounts payable and is helpfully included. A page and a half of questions concludes this section. Long-term debt follows the same process. Additional liabilities examined include taxes withheld from employees' pay, accrued payroll, and pension plan accruals as well. We immediately turn to equity, which includes an examination of capital stock and retained earnings. The last items examined are the income statement and cash flow statement. The importance of classification of class flows as operating, investing, or financing items is stressed in this section. 2 pages of questions conclude this chapter. Although this section was lengthy, it consisted of a basic framework of analysis and test that was similar for all 10 accounts. We will expand on a few of them in class to complete our discussion of the topic. Obviously, we can't do this in an online class, but I would be happy to include further comments if you so desire. Looking forward to next week. Bye-bye.